This video is created by Jagrat Creation. It is on single entry capital comparison method. In this method, books of accounts are not recorded. Profit for the accounting period is found out by comparing capital at the beginning of the accounting period and the capital at the end of the accounting period. I want you to observe one sum on the screen, which I intend to solve by capital comparison method. Read it carefully. I'll explain the sum and then solve here before you. For the purpose of understanding the sum, pause the video for a while. Read the sum carefully. Now I start explanation of the sum. In this sum, you are given as on 31/3/2015 details of assets and liabilities, that is furniture, advances, debtors, creditors, stock, loan, cash at bank. All these items will go in the opening statement of affairs, that is a statement of affairs that we prepare for 31st of March 2015. Over and above, in the opening statement of affairs, you are required to write down these current account balances. Credit balance of a 5,000, debit balance of current capital account of B 2,000. That will also go in the opening statement of affairs, because the date of balance is 31st of March 2015. It is alike to this date. Now another important point that I want to bring to your notice, that observe this. Here you have to understand, on 30th June, they took C as a 1/3 partner. So on 31/3/2015, A and B were the partners sharing profits and losses in the ratio of 2:1. So share of A was 2/3, share of B was 1/3. After 3 months, on 30th June 2015, they took C as 1/3 partner. So share of A was 2/3. It has become equal share after admission of C, that is 1/3. New profit sharing ratio is 1:1:1. So share of B was 2/3 before admission. Share of A after admission is 1/3. So out of his 2/3 share, he has given 1/3 share to C. For that, he brings 75,000 as the proportionate capital. So 1/3 share proportionate capital is 75,000. That C brings, and C is getting his share in profit from A, because A's share before admission was 2/3. Out of that, he has given 1/3 share to C. For 1/3 share, C brings capital of 75,000. That will be withdrawn by A, and whatever the capital that B was having will remain same throughout the year. So what is the important point that you should notice? New partner admitted C after 3 months. So for first 3 months, A and B are the partners. For next 9 months, 3 partners are there, A and B. Before admission, the profit sharing ratio was 2:1. After admission, the profit sharing ratio is 1:1:1. So from 2/3 share of A is become 1/3. He has given 1/3 share to C. For that, he brings capital 75,000. That is withdrawn by A to keep the capital proportionate. So in the opening statement of affairs, I will write down all these assets and liabilities. In the opening statement of affairs, I will write down the current account balances. In the opening statement of affairs, I will write down the fixed capital of A and B. The fixed capital of A is 2/3 share. 1/3 share capital is 75,000. 2/3 share capital will be 175,000 into 2. That will be 1,50,000. So share fixed capital of A at the beginning as on 31/3/2015 will be 1,50,000 and 1/3 share of B. So his capital also proportionate capital should be 75,000. So in the opening statement of affairs, I'll write down the fixed capital of A 1,50,000 and the fixed capital of B 1/3, that is 75,000. But at the end of the accounting period, that is on 31/3/2016, I am going to prepare a statement of affairs wherein all these assets and liabilities will be recorded. While writing this furniture, 1,20,000, the addition made 10,000. See, depreciate furniture at the rate of 10%. New purchases were 10,000. So original purchase were 1,20,000. New purchases are 10,000. So in this closing statement of affairs, the furniture will be recorded 1,30,000. And after writing these assets and liabilities in the closing statement of affairs, I will find out the combined capital of A, B, and C at the end of the accounting period. In this accounting period, A and B are the partners for first 3 months, and A, B, and C are the partners for next 3 months. So closing statement of affairs will be prepared on the basis of this information. Over and above, the furniture will be recorded 120 plus 10, 130, and I will find out the closing capital. This closing capital will be the combined capital of A, B, and C. But in the beginning of the statement of affairs, I have got a classified capital of A and B. That is 1,50,000 fixed capital of A, 75,000 fixed capital of B, and I am also given the details of current capital account of A and B. So in the opening statement of affairs, I have got bifurcated capital, but in closing statement of affairs, I will get the combined capital of A, B, and C. Over and above, you are given the adjustment in the sum for salary to a partner, interest on capital, interest on drawings. All these adjustments are given. Now let me go first of all calculating the salary given to a partner. The partners are entitled to a salary of 2,000 per month. So A will get a salary of 2,000 for the whole year. B will get a salary at the rate of 2,000 for the whole year, 24,000. But C is a partner only for 9 months. So C will get a salary of 2,000 into 9, 18,000. So total salary to be paid to the partners during the year, 77,000. This salary paid to a partner is considered to be an adjustment. I will find out the profit by capital comparison method. From that profit that I have found out by capital comparison method, from that this salary will be given and the current capital accounts of the partners will be credited. Now let me work out the interest on capital that is to be given at the rate of 6%. A and B are the partners for the whole year, but C is a partner only for 9 months in the last part of the year. Now I want to work out the interest on capital for A, B, and C. As I explained to you, capital of A, 1,50,000 at the beginning of the year. It remained as 1,50,000 for first 3 months. So 1,50,000 into 6% for 3 months. After that, he has withdrawn 75,000 against his 1,50,000 because he has transferred his 1/3 share to C. So for the remaining part of the year, 9 months, his capital is 75,000 because 150 minus 75,000 withdrawn by him. So 75,000 is the capital for next 9 months. On that, 6% interest will be calculated for 9 months. Capital of B, 75,000 for 1/3 share in profit remained same throughout the year. So B is entitled to have an interest on 75,000 at the rate of 6% for the whole year. Now C is a new partner. He is a partner in this partnership firm only for 9 months, last 9 months. So he is entitled to have an interest at the rate of 6% on 75,000 for 9 months only. So this is the total interest on capital, 13,500. This interest on capital will be given from the profit that we have found out by capital comparison method, and this interest on capital will be credited to the current capital accounts of the partners. interest on drawings, 10%. So A has withdrawn 2000 on 30th April. So on 2000, I will calculate interest on drawings at the rate of 10% for 11 months. How 11 months? He has withdrawn on 30th April. After April, how many months are there? Till 31st of March 2016. After April, May, June, July, August, September, October, November, December, January, February and March, 11 months. So 11 months is interest is calculated at the rate of 10% on the amount withdrawn by A on 30th April. That works out to be 183. Now he has withdrawn 4,000 on 30th June. So after June, how many months? July, August, September, October, November, December, January, February and March. So 9 months interest will be calculated. So 4,000 into 10% into 9 months. Similarly, last drawn December 31st, so 3 months interest will be calculated. So interest on drawings for A works out to be 183 plus 300 plus 50. So that works out to be 533. Now I want to calculate interest on drawings for B. He has withdrawn at the end of May 2000 rupees. So on 2000, you have to calculate interest after May. So June, July, August, September, October, November, December, January, February and March, 11 months. Or 10 months, 10 months, 10 months. Now 6,000 into 10% amount is withdrawn on 30th September. So after 30th September, October, November, December, January, February, March, 6 months interest. And on 8,000, he has withdrawn on 28th of February. So interest will be calculated for 1 month, that is for March, 67 rupees. So this is the interest on drawings. So I have calculated in salary, interest on capital and interest on drawings in explanation. I am also required to work out the depreciation in adjustment. On 1,20,000 depreciation will be calculated for the whole year and the new purchase is 10,000. We are required to calculate depreciation for 1/4 of the year. So new purchases depreciation will be calculated for 1/4 year, 1/4 of year. And this depreciation also will be deducted from the profit that we have worked out by capital comparison method, and it will be deducted on the face of balance sheet from the furniture. Now this is how I have tried to explain you this sum. Now I want to start solving the sum. Once again, first I will prepare opening statement of affairs. Let me start now. This is my opening statement of affairs. As I told to you, all the assets will be transferred to the debits asset side. So furniture on asset side, advances asset side, creditors will go on the liability side, debtors asset side, stock will go to the asset side, loan is a liability that will go to the liability side, cash and bank balance asset side. Now I'll write down the current capital account balance. The credit balance of current capital account will go on the liability side and debit balance of current capital account will go on the asset side. Now total of assets minus total of liability. As you know that the capital will be 1,50,000 plus 75,000. So 2,25,000. Their capital is in the profit sharing ratio. So if you work out 2,25,000 into 2/3, capital of A will be 1,50,000 and capital of B will be 75,000. That is 2,25,000 into 1/3. This is how my opening statement of affairs is prepared. After preparing this opening statement of affairs, I want to prepare a closing statement of affairs wherein advances asset side, creditors liability side, debtors asset side, stock asset side, cash and bank balance 1,40,000 and furniture as I explained to you, how much 120 plus 10, 1,30,000. Total assets 130 plus 50 plus stock 750, 45,000 debtors. This is the total of assets. From that creditors are deducted. So you will get the capital of A, B and C. Combined capital of A and B and C is 4,09,750. Now this 4,09,750 is required to be bifurcated between A, B and C in light of adjustments administered, in light of opening current capital balances, in light of opening fixed capital balances. That we shall do. But this closing capital will be compared with the opening capital and we shall find out the profit. You know that the formula for preparing capital comparison statement. What is the normal formula? Opening capital plus additional capital minus drawings plus profit is equal to closing capital. I want to make profit as the subject of equation. So profit is equal to closing capital. Opening capital goes to the opposite side. So minus additional capital go to the opposite side. So minus drawings go to the opposite side. So plus. Now let me write down this formula. Closing capital plus drawings minus additional capital minus opening capital. I'll get the profit. Let me start. Closing capital 4,09,750. Then opening capital is fixed capital 1,50,000. B is fixed capital 75,000. Current capital, that also considered as the opening capital. The current capital balance of A is 5,000. That I will write in the current account, wherein I am going to give the adjustment effects also in current account. I will get the bifurcated balance of current account by end of giving adjustment for all these things. So current capital account opening balance 5,000. That is also considered as opening capital to be deducted to find out the profit. Debit balance will go to the debit side of current account and that will be considered with negative sign. So opening current capital balance is 5,000 minus 2,000. That works out to be 3,000. This is the fixed capital. This is the total opening capital will be deducted from this closing capital to find out the profit. Now I want to consider the drawings. Total drawings of A, 2,000 plus 4,000 plus 2,000. So 4 plus 2, 6 plus 2, 8,000. Drawings are added to find out the profit. Similarly, drawings are debited to the current capital account of A. He has withdrawn against the profit during the year 8,000. Similarly, drawings of B will be added in the capital comparison statement and that will be debited to the current capital account of B. This is how effect of opening capital, drawings, closing capital given in the capital comparison statement and the similar effects are given in the current capital account. Now I want to consider the additional capital brought by C on admission is 75,000 and that amount is withdrawn by A because he has transferred 1/3 share of his profit in favor of C. So additional capital brought by C 75,000 and it is withdrawn by A. So it is considered in drawing 75,000 and additional capital brought by C is recorded as additional capital. Now on the basis of this information, drawings are added, opening and additional capital is deducted. So this is the gross profit that I get. This is a very important point that you should notice. Now from this gross profit, I will deduct salary paid to partner, interest on capital paid to a partner, depreciation on furniture will be deducted, but interest on drawings is an income that will be added. Now let me start giving the effect of adjustments. Now depreciation on furniture 1,30,000. As I told to you, depreciation will be calculated on 1,20,000 for the whole year. So 1,20,000 into 10% depreciation for the whole year. And on additional furniture, depreciation is to be calculated for 1/4 of the year. That's an important point. So this is the depreciation works out to be 250. 12,250 will be deducted and will be deducted from furniture balance on the asset side. And it will be deducted from the gross profit. Now, next, entitled to a salary of 2,000 per month. I have already calculated salary. A's salary for 12 months, B's salary for 12 months, C's salary for 9 months. This I have already explained. So this total salary will be deducted from profit and it will be transferred to the current capital accounts of the partners. So 24,000, 24,000, 18,000 credited to the current capital accounts of the partners. Now, after this, I am required to work out the interest on capital. 2,25,000 is the total capital, 1,50,000 beginning capital of A that remained in the business for 3 months. So on 1,50,000, 3 months interest, and remaining 75,000 remain for 9 months. So 9 months interest will be 375. Capital of B 75,000 remain for the whole year. So 6% interest for the whole year. While in case of C, he brought rupees 75,000 as the additional capital that remained for 9 months. This interest on capital total will be deducted from the profit and it will be added to the credit side of current capital account. Now, interest on drawings. We have already calculated interest on drawings, so I just move it fast. This is the interest on drawings for A, interest on drawings for B for 10 months, 6 months and 534. This I have already explained to you. Interest on drawings is an income of the firm, so it will be added to the profit. So minus, so plus. So 1067 is to be added to the profit of 2,05,750. From that, depreciation, salary and interest on capital will be deducted, and this is to be debited to the current capital accounts of the partners. Now I can find out the profit. This profit will be distributed amongst partners. How will it be distributed? The profit for first 3 months will be distributed between A and B in the ratio of 2:1, and profit of last 9 months will be distributed between A, B and C in an equal proportion. This is how profit is going to be distributed. Let me start. So total profit that we have worked out by capital comparison method, that total profit I write here. First 3 months profit will be 1,15,067 into 3 by 12. This is the first 6 months profit that will be distributed in the ratio of 2:1. So share of A is 28,766 into 2/3, that is 19,177, and share of B will be 1/3. So that goes to B's share. Now profit of last 9 months will be 1,15,067 into 9 by 12. 86,300. This will be distributed equally amongst partner. Share of A 1/3, share of B also 1/3, share of C is also 1/3. Now this is the total share in profit of A. This is the total share in profit of B. This is the share of C in profit. Now the share in profit is transferred to the current capital account, A, B and C. This is how profit distribution takes place. Now I will find out the balance in the current capital account. Total of A minus debit, total of B credit side minus debit. So I will get the current capital account balance. So 82,569 minus 8,533. So this is the current capital balance. Here also current capital balance works out to be 48,322, and there is nothing debited in C's capital account. So 50,142. I will write down the current capital balance on the liability side of my balance sheet. I would like to write down the fixed capital in the balance sheet. For that, opening capital A 1,50,000, B 75,000. As you know, C brought 75,000 and A has withdrawn. So C's capital account is credited and withdrawal by is debited. Now you'll get a fixed capital equal of all the partners, that is 75,000, 75,000, 75,000 each. That fixed capital will go on the liability side of the balance sheet, 75,000, 75,000, 75,000. Now I want to copy the remaining balances from the closing statement of affairs, that is creditors liability side, advances asset side, stock asset side, debtors asset side, cash and bank balance 1,40,000. Now have a total of balance sheet that works out to be 4,27,500, 4,27,500. This is how this sum gets solved. I have tried to explain you this sum, initially explaining the details given in the sum, then all the details explained are operated while solving the sum, and ultimately the sum was completed. I feel that you have followed all these things.